All right, we'll go ahead and get started. Hopefully, everybody can see and hear loud and clear. We should be good to go. Pretty action-packed week ahead of us, so I want to run through some of these earnings and give us really just some core notes for the next couple of sessions. So, a couple things to just jot down and go over. I was looking at okay. Oh, let me talk about Tesla up front. So Tesla has a bull flag pattern here on the daily time frame. So I did want to point that out for everybody. So ahead of their earnings, they do have a bull flag pattern. So we are getting ready to actually go ahead and see their quarterly earnings numbers come out. So with Tesla, the upside top level resistance is going to be around 460, roughly about 458. So if we do see Tesla get back over that level this week, we do anticipate it may start to take a move upward to 500. So it's definitely something for you to look at on your screens and monitor for this upcoming week. Now, one thing that I did want to discuss up front was so we kind of had this relationship between the VIX and the overall market. You're seeing the VIX index shoot. We saw it shoot over 25 very briefly. It actually drew back down. So we do see a lot of fear in the market. When you do look up CNN fear and greed index, just pull that up on your CNN.com, fear and greed index. So you do have us right now at a 27, right? So we did close previously at an extreme fear, but currently we're at fear. So there's a lot of questions around that and saying, okay, well, if we're relatively looking at the market, SPY is still at an all-time high. QQQ is still at an all-time high. Majority of the tickers are still at an all-time high. Why is it that we see the VIX shooting to the upside so much relatively with no real market pullback? There's a few instances in my time where I've seen this. One dating back to 2019, which was in the months of I have my notes in front of me. So I do remember the VIX starting to take a little bit of a forward leap even before the drop. So 2019. Yeah, right here. Exactly. It was December. Didn't want to speak incorrectly. But right here, before the market even started to really drop, you notice that in the months of December and as well in January, the VIX did break out to the upside here. And then, of course, in February, we understand what happened here. But even early before the major drop in the market, the VIX started to rise. So, like I said, this is the first time I really kind of seen this pattern where both the VIX and the market were going up a couple of instances this week. So, a lot of what it looks like is people are kind of going to a little bit of the short side, looking for a little bit of protection, maybe a little bit prematurely. We'll see though. The VIX did sell back off to 20 before the market closed yesterday. So it's kind of a wait and see game. I think a lot has to do with these earnings that are getting ready to come forth. So it's definitely, one thing to pay attention to. Just previously, when I have seen that the VIX is rising while the stock market is rising, every single time that I've seen that, it's ended with the market pulling back. So that's just some notes for people to look at and think about. So let's go back. To present day. We've been hovering relatively around this $14, $15 area on the VIX, and then we just kind of shot up really quickly. So the VIX, if it can get back down to that area, you'll more than likely probably see the market shoot back upwards, but definitely you are seeing a bit of cautiousness ahead. Some of these quarterly earnings getting ready to happen. So that's my thoughts with the VIX. Like I said, I would just be mindful of that. Fear and greed index, once again, is at 27. So it's a little bit uncommon to see the fear and the greed index be at 27 relatively. The fact that we haven't even fallen. If you look, you go to the timeline, You look at the last time that we seen a drop here into extreme fear, we actually did come down. The market was actually coming down. This time around, the market so far has not really pulled back at all. So that's the difference between the last time that the VIX ran versus this time is essentially we haven't really seen a major pullback at all. Just really a slight upward movement on the VIX. So those are my thoughts on the VIX. Next thing that want to go over, I want to talk about Bitcoin, BTC, Bitcoin US dollar. So for past couple of weeks, I mean, we did see Bitcoin rally, to a little bit of volatile action over the past few weeks in this asset class. We saw a rally up to 125, didn't break there, rejected back down. So a lot of questions about 99,000, 100K for BTC, and a lot really, especially when it comes to the more risky assets. Looking, I know questions about names like MicroStrategy pop up, ticker MSTR, which is directly tied. MicroStrategy has earnings in 12 days. So if Bitcoin does break below this 99K, it's the low from June 23rd of this year. So you'd be looking at roughly almost a 4 to 5 month low. If we do break below that point, then Bitcoin starts to tumble back down to maybe 90 to 94,000. So the lowest I see Bitcoin dropping ever, I don't think you see Bitcoin ever underneath 50,000 ever again, right? Maybe not even under 70, but definitely I don't see it ever going back below 50,000. Right, the asset class is too developed now. It's a lot more institutional money, which is why old times, you probably would have already seen Bitcoin had a 50% pullback, even with the stock market being up as much as it is. So you haven't seen, you don't see a lot of fear in this part of the market like maybe you used to. So those are my thoughts with BTC. Now, as far as for MSTR, MicroStrategy, strategy really goes as far as Bitcoin does. So Bitcoin drops, strategy drops. And strategy tends to drop a lot more severely when we do see BTC drop. So the levels is followed. I had a conversation a couple of weeks ago about MicroStrategy being in a bear flag. It did break down out of that bear flag. Next two levels on the downside would be 280 and 267. As far as exposure, I would not buy MicroStrategy higher than $200. So let me show you on MSTU, because a lot of times people like to play these levered ETFs, which is perfect. So MSTU, you guys should have this level already down. But if you don't, I want you to put it down now. It's $2.50. So $2.50. That would be my suggestion for you to get MSTU. So $2.50. All right. Best price, best case scenario, maybe you get $2. But $2.50, that'll take you back to last year, 2024, that low. So below $200, I think would be perfect. Perfect spot. Maybe 150, 180 gives you, a really great case and scenario, but I would not be a buyer of MicroStrategy above $200. Or say MSTU, $2.50. So set your alerts there so you know exactly what's happening. Now, a lot of people ask me about Misty. It's the MicroStrategy leveraged option. It's the Yield Max ETF. I always tell people when it comes to these products, it's the same thing. It's about where you buy it. I'm going to give you guys this here today. Misty, MSTY. I want you to get MSTY. I want you to put some alerts on that for $7. $7. So I want you to put some alerts on that. MSTY, MicroStrategy option income strategy ETF. So this is MSTR's option strategy ETF. $7, guys. So really, there's nothing to really talk about. until it gets there. $7, maybe $8 if you want to take a crack at it early, cool. But other than that, I don't want to hear about this name. MSTU, I don't want to hear about it until it's at $2.50, and then you should already know what to do. Micro strategy, listen, you understand now $200, less than 200. Other than that, I really don't want to talk about it. Let's go to Coinbase, ticker coin. All right. So a ticker coin still remains that 293 level and 281 area still remain those areas that coin has yet to break below. As far as for Coinbase, anywhere between 200 to 240, I think is a good spot. A great spot would be between 130 and 160. So, your perfect spot would be between 130 to 160. A good spot would be between 200 to 240. Someone might be saying, well, the stock is at 336. Why would you be giving us these levels? Because, push come to shove, we understand this market can come down a lot faster than what it goes up. So at least you have the numbers. Now it's not a question of, okay, what should I do if this happens? You already have, okay, this is where I should be looking to buy a little bit. This is where I should be looking to buy in bulk. You always have your your can't pass up type levels where, stocks hit certain points where you're like, all right, I just can't ignore it at these places. So just giving you guys that ahead of time. So have it written down. And so push gonna shove, those numbers actually go ahead and materialize. You're in a position to actually execute on that information. So those are my thoughts at this time on those names. So just covered kind of really the bulk of everything within that space that we really touch on a consistent basis. Circle Internet Group. I can't forget them. Circle Internet Group was a pain in our ass. I'll say that because it's just the volatility really in crypto really caused that. But Circle did come down, did end up being a profitable trade. So to thank them for that. They caused a headache. I'll say that. But Circle came down here yesterday to 120, created a lower high. The break below 120 will drop us down to about $108, $109. So on Circle Internet Group, just like we feel the same way about a lot of these new IPOs. We're not bullish on new IPOs for the most part. We like we like for them to at least get at least 6 to 9 months of trading before we even consider taking any positions on these names, especially with how stocks come to market now, traded significantly above their initial public offering prices. And then they trap investors, who buy maybe the first few weeks or first few months, and then they dump on them. They trap you in, suck you in, and then they end up trapping you in those names. So you just got to be mindful of that. And I would definitely suggest for Circle Internet Group to adhere and take those notes on Circle. Those are kind of my main thoughts on Circle Internet Group at this time. See. Get Amazon real quick. So ticker Amazon yesterday got down to the 210 level. We're still waiting to see Amazon get below that point. It hasn't done so yet. So once that happens, we'll be able to see Amazon probably move back down to 206. So just really waiting on ticker AMZN to make that move. So we're just waiting on that to actually go ahead and materialize. Outside of that, if we do see a move on Amazon back above 220, 220 would be where we start to see any movement there higher. Probably Amazon could probably run back on the upside, but as everyone knows, we covered Amazon, Meta, and Netflix, and we're not. I don't think we're pretty bullish on either one of those names. Those three names have kind of been the ones like looking at Meta platforms. Earnings obviously would be here in a second, but we're not bullish on Meta really, and we're definitely not bullish. I don't believe on Netflix at all. I want you to set an alert for 11:50 for Netflix, right? 11:50. If you haven't done so already, set one for 11:50. If you haven't done so already, just go ahead and set that alert. On Amazon, make sure you have at least an alert at 2:11 and as well as 2:07. So we are pretty bearish on more short-term bearish, definitely not long-term bearish on any of these names, but short-term bearishness definitely on a few of these names. We don't see any real bullish setup. Now, could earnings come in, particularly for a name like Netflix? Earnings happen next week. The earnings come in and blow out, be a blowout report and lift the stock upward. That definitely could happen. That'd probably be the only saving grace would be blowout reports from some of these companies. Other than that, we're not bullish, like I said, on Netflix. We're sitting right here. If you look on the weekly time frame on Netflix, you're sitting right here in a bear flag pattern. So you have a bear flag pattern that's building here on ticker NFLX. So if we see the bottom of this flag break, we'll be looking to the downside here on Netflix. So just my thoughts on NFLX, Amazon, and as well, when you take a look at Meta. Now, majority of these names all, of course, fall under the NASDAQ, but they also fall underneath what we call the XLC ETF, which is our communications sector, right? So our communications sector, so definitely wanted to say that. So, yeah. Questions about XLC, XLC, XLC. Any questions about pertaining to XLC right now? That's your questions pertaining to XLC. That can I Netflix? So this is a bear flag on Netflix, not a bullish flag. It's a bear flag. NFLX, it is a bear flag, not a bull flag, a bear flag. Yep, correct. That's been building. What month is that? That's been building since July. Excuse me, June. Yep. That's been building since June. Mm-mm. We can take a look at Google. So as far as Meta, I mean, that 691 level. Yeah, probably I would say out of the four names that sit at top of the XLC, the only one that has any real bullish sign would be Google. Google ran a lot throughout the month of September. They ran to the upside. September was really their month. So if you look at Google, Google's probably the only one that has some sort of bullish setup. They actually have a bull flag on Google. So if you're looking at Google, you definitely can expect a move upward on Google more than likely. Definitely has a bullish pattern, not a bearish pattern. Rest of the three tickers are either one trading sideways or two trading downwards. That's my thoughts on that. So Google could be the saving grace. We'll see though. Google will report as well here in a second. So we get an opportunity to hear from them. I want everyone to pull up ticker Bull real quick. I want you guys to pull up Weebull, pull up Bull, Weebull Corp. Where we at? Perfect. Let's say. So Weebull right now is just been making lower lows and lower highs. Who remembers, for those that were here, who remembers the level I said to go ahead and purchase Weebull at? Who remembers that level? Anybody? We're gonna see. 8 to 12, 6 to 8. Jimmy's actually right. Jimmy's right. I'll put some flowers in the chat. This is right as well, too. $7, correct. Yep. So 6 to 8, $7 is the correct answer. So definitely, to me, Weebull is a good buy down there. Do we think we get down there? For sure. It's about to happen sooner rather than later. So once we can get below this June 13th and 16th low, in the middle to end of June low, that's where Weebull will be heading next. Just another prime example of staying away from these new companies when they first IPO on the market. It will save you a lot of headache. You know, you guys remember Weebull came in, and this is just what I call a classic pump and dump. Weebull came in their first week and they were shooting up here 70, $80 almost. Sold off, and since April, which means since May 1st, they've been trading within the same $10 range. So looking here now, like I said, I would just make sure that those alerts. A lot of people had questions as far as picking up this stock. So wanted to make sure that as I was seeing it break down, I wanted to tell you. So Weebull is probably going to come down to about $7, $8. That's a good price to own that business at and to be able to grab it. So those are my thoughts on the stock at this time. All right. So next thing I want to discuss is funny enough in the same sector. So we're going to pull it up now. Robinhood. So Robinhood has had an incredible year. I think you look at it as just amazing, right? Especially since April. Robinhood is kind of facing a little bit of selling right now. Also, with Robinhood being within the ARK ETF in the high growth space, I know there was a point in time when Robinhood was just running up here to 150, and people asked, "Hey, what would be a good price to get Robinhood?" I still don't believe that there's a good price above $100. So I would say a good price would be around 70 to 80 that you would need for Robinhood to become maybe an attractive ticker for you to be able to pick up. You're talking about going back to levels in June. You think about it, since June, the stock basically doubled. So stocks that usually, run and double within 4 months, they usually face the worst pullbacks. So definitely I do anticipate and expect that if you do see a move down here on Robinhood, that'd be from a long-term investing perspective, a good price. Not speaking about anything trading wise right now for Hood. Now on the trading side, now we'll speak about trading. Below 123, you're going to drop to about 117. And then below that, I think Robinhood will come back down. Maybe it's giving you an opportunity to get it as low around like 110. So those are my thoughts on Hood, HOOD. Definitely bearish, maybe in a short term here, but I think long term as far as best price. I know I see some targets out of like 200 and 240 and 250 on Robinhood, which definitely can happen, but the business has to catch up to the move that's being taken place right now. So those are my thoughts on that name, Hood. Next stop is a breakout. I think it's one good day away from breaking out, right? So I'd like to give you guys some things. So take a look at CELH. I mentioned this about 2 weeks ago. Check their calendar. No, it was 11/5. So Earnings will be on November 5th, so about 3 weeks away. But I wanted to cover Celsius, ticker CELH. Give you guys this kind of layup move on CELH. Like I said, one good day away from breaking over this 64, and it's going to shoot. So get ready for CELH to go up about another, I would say $4 to $5 up here to about 68, $69. So we are bullish on this name. We do anticipate that it becomes a part of the short squeeze party. That's been a party that's been happening on Wall Street here over the past number of weeks. So do look at CELH. CELH looks like it's going to squeeze to the upside here and get over probably $70. So you do have an opportunity to catch that move there on the upside. So, yep. Wanted to make sure I mentioned that. Is the ticker that popped up on my radar this week. So CELH, once again, we're expecting to head towards 70. We do have an upside move anticipated on that. Now, next thing, this is what we call just adding a layer of protection. So majority of us, I definitely could say, are probably somewhat maybe overexposed to the semiconductor sector. It just happens. And it's kind of hard not to be, especially you and MU, you and AMD, you and TSM, you and NVIDIA, you and all of these ASMLs, you and all of these different AVGOs. The list goes on and on of the semiconductor names that you could be involved in. And you might be just over leveraged on the names. So we talk about leverage ETFs, right? So I want to talk about SOXS. So unlike its opposite, which is SOXL, right? The semiconductor bullish ETF, which SOXL is up to $40. When you look back here in April, it's at $7, $8 a share. It's at 40 now. So it's giving you, if you got it at $7, it's giving you over 500% return. But you look at the SOXS, I mean, just here since September, the SOXS is down 50%. Cool, right? But if you go back to April, SOXS is actually down from 50 to $4. So you're looking at, over a 90% drop pretty much from the high. And of course, that was when the market was dropping. So SOXS shot. So what do I mean by adding a layer of protection, right? So at any given point in time, SOXS could shoot if the semiconductors start to crumble and come down. If there's a massive profit take on the market, we can almost guarantee that it'll be because of the semiconductor sector, right? So we can't time when a pullback can happen. We can't time it to the day, to the frequency. Majority of them happen when people least expect it to. What we can, though, conclude is that the market definitely is overran, it's hot, and at any point in time, it could happen, right? So you would rather be ready than scrambling to try to get ready. So I would suggest, SOXS is $4, right? So you could get 100 shares for like $400. Not that bad of a layer of protection. Worst case scenario, let's say your NVIDIA, your MUs, and your AMDs, they get pummeled 20%. If that is to happen, you could probably count that SOXS will be, going up, pretty significantly. Now, here's what's going to happen with SOXS, just to give you a bit of a spoiler as to what will happen with SOXS. So here's the thing, if you buy it now. If you buy the shares of SOX now, you see them at $4. Now, I'm not in their back room, so I don't know what's going to happen to the T, but I can tell you when an ETF like this does break below $10, they usually have to do what is called a reverse split. Now, they may do a 5-to-1, a 10-to-1, a 1-to-5, or a 1-to-10. Right. So it's the opposite. So they may do a 1. If you have 1 share, you'll get 5 shares. Or if you have 1 share, you get 10 shares. Somewhere in between there, that's what's going to happen over the next, I would say over the next couple months. I can't, like I said, I'm not in a back room, so I can't tell you exactly when it's going to happen. I just know it will. Now, with that being said, if you get the shares, you get 100 shares at $4 a share, and they do a 1 to 10. What does that mean? You'll go from having 100 shares to 1,000 shares, right? So that's what's going to essentially happen. You'll go from having 100 shares to 1,000 shares. Now, that could be something that does take place, relatively in the market, or vice versa. They could do now the reverse of that, right? So let's say you do have 100 shares, right? Now they could knock you down to 10 shares. So I'm explaining this in two different ways. Majority of times when people think of splits, they think about having a certain amount of shares, which is 100, and then getting 1,000, right? Now that has happened with AVGO, that's happened with NVIDIA, that's happened with a multitude of companies over the years. Now with the reverse split, let's say you have 100 shares, you now are going to get knocked down to 10. Or if you have 1,000 shares, you're going to get knocked down to 100. So if they do a 1 to 10, essentially now, you are going to see your shares increase. Let's say that it may send SOXS back to $40, but you may go from having 100 shares to now having 10 shares. So that is something that is possible, right? Not to say that it's guaranteed, but it is something that could happen. Regardless of the fact, I think it's worth taking some protection. Now, some people are going to say, how much should I buy? Should I just put a boatload of money? No, these instruments are designed to go down. The same way that the SOXL is designed to go up, the SOXS is actually designed because it's a bearish ETF. We know the market is designed to go up. So these bear ETFs are designed to go down. But that doesn't mean that they don't have times where they do run to the upside. So I think with the SOXS, it's the easiest way and probably one of the cheaper ways to take a little bit of protection on some of the upside movement. I mean, like I said, since the beginning of September, SOXS is down 50%. That just lets you know what's been happening in the semiconductor space. Since September, right? We've seen SOXL go from $23 to almost hitting 45. So relatively, we've been running consistently to the upside, on the overall markets with no virtual pullback. I think it's worth taking a little bit of protection, put some, protect yourself on the side, and it's all right. Right. So that's my thoughts with the SOXS. Like I said, if you get it here now, you may get 100 shares today, or obviously, well, Monday or Tuesday, whenever you get in. And they may do a reverse split and you may only have 10, but the stock price will go up. It's not like you're going to lose money, just giving you guys a heads up on that. So if you see that happen while you may be in this, and just as a disclaimer, I would not get overexposed. So do not base your whole strategy now that I mentioned SOXS. This is purely a hedge, an easy way to get on the other side. Worst case scenario, this thing drops a little bit more. Cool. Best case scenario, you protect yourself and, SOXS maybe shoots to 10, $12 and you make a little 200% return off of it. And you protected a little bit of your downside that can happen. Worst case scenario, like I said, AVGO comes back and pulls down, AMD pulls down, NVIDIA pulls down. As we know, these names are sitting at the top of the market now. So the next pullback in the market should not be any surprise. The next pullback in the market will come because of the semiconductors. Simple as that. The last pullback did. So what makes you think that the next one won't when you got two of the top 5 companies in the NASDAQ both being semiconductor names? Just the reality, right? So really, if you think about the top 12 out of the 3, 25%, is made up of semiconductor names. If you think about it from the top 12 perspective, so 25% allocation of the top 12 names right there come from the semiconductors. So big time movers, shout out to all of them, MU, AMD, the list goes on, but just take some protection out for yourself. Just keep that in mind. Now to cover NVOX, I want to make sure that I cover this again because I think some people miss sometimes some of the things I'm saying. The best price scenario was always $2.75. So when I get messages like, are we still buying NVOX? Are we still bullish on NVOX? Yeah. We already assumed the risk that, hey, if you get in at $4, there could be a chance that it drops to $2.75. We've already assumed that risk. And one of the things that I said was, as it comes down, that you should just buy more, right? Only time will tell when this thing blows, but we think it will. So just be patient. Once again, I would not be the person that doesn't buy more. You've seen how that plays out. When AMDL was dropping, and I told people, hey, at $5-6, start to look. And people got it at $5-6, but then AMD, because of the market dropping, went to $3. People didn't buy more. And now they look at AMDL at $20 and say, when's the next time I could get in? Or a TSL or SOXL, the amount of this is why I say, like, there's not, you may get into something, but you might have to average down, and that's okay. But an NVOX, I think it's worth the risk to reward that you can expensively, potentially see in a payoff. So this is what I'll say about it. Make sure you execute on that. So that's just my thoughts. Boil. So I just want to make sure that everyone understands what Boil. Boil is one of those ETFs as well that's very volatile. So it's here at about $26. When Boil blows, our projection is somewhere in between November to February. So we're about to head into November. So definitely wanted to say, 1 second. So definitely want to say, like, between November and February, we expect Boil to play out. As high as it goes, I mean, we'll look at it and say, okay, we'd like to see it go to 60 or 80. We may not get that. We would be cool with 40, 50, 55, cool. But as far as Boil right now, we don't anticipate it to run just yet. But the expectation was during September and October was to start to build a small position little by little. So you should be doing that. That's really my thoughts with Boil. Just another true hedge overall to the markets. So that's my thoughts on ticker Boil. So Boil. So we covered pretty much, majority of what I wanted to speak about today. Like, I want to go over this VIX again, guys. Please pay very much attention to the VIX. About to cut up out of here. We will have a 3-hour class tomorrow from 11 to 2. So be looking out for that Zoom code, and we'll be live on Zoom from 9 a.m. to 4 p.m. Every day, Monday through Wednesday this week. So a lot of action will be on the line pretty heavy this week. So once again, pay attention to the VIX, right? The VIX index. I can't stress this enough. The VIX going up and the market going up has always ended virtually in the market coming down. Does history remain the same? We'll see. But that is pretty much the bulk and the majority of notes that we have really right now. So some stocks are sitting at key supports. Others are just kind of just range bound, and a lot of sideways action and movement side by side. Over the past couple of sessions, we just seen consistent, movement, there to the upside, and then right back there to the downside. So we've seen that, kind of over and over again. Nothing, a move upward overnight and then a move right back down. That's been a theme. Netflix and Tesla had a stage this week, so we'll see what they can produce. With Tesla, they have a big bull flag. We'll see over 460. We believe this stock can run. So preliminary thoughts. We'll see. It's tough to call, especially with these earnings, because guidance is so key. Think Tesla may run. I don't want Netflix to go down, but the chart says it looks like it will. That's why I said make sure you have that alert for 1150. But I don't think it's a bad thing if Netflix pulls back down to $1,000 or 1,500. Yep, yep. So I appreciate y'all. We'll go ahead and wrap up. I'll see everybody tomorrow, 11 a.m. sharp. So y'all enjoy the rest of your Saturday. I believe I owe you a recording from the other day, and then I owe you this recording as well. So we'll get to that. Yep. All right, great people. We'll talk soon. Peace.